morning, everyone. This is Amit Pabari, founder and managing director of CR Forex. Lot of exporters and importers have been asking us that rupee is trading in a narrow range, and where do you expect dollar rupee pair to move in the coming days? Before we answer that question, let us analyze the factors which will affect dollar rupee pair for coming days. Let us start with positive factors for USD INR pair. The first positive point for USD INR pair is falling dollar index. As discussed in last week video, that we are expecting dollar index to come down from 103 level to 101.50 level. Exactly the same has happened, and we further expect the dollar index will be under pressure for next few weeks, and it can move towards 99.5 level. Whenever dollar index comes down, at that point of time, all emerging market currencies get appreciated. Last week we have seen most of the emerging market getting appreciated, but rupee was stable. That is the second reason. Third reason is that bond yield in the US have started falling as inflation expectation in the US has started falling down. And the fourth reason is MSCI index inflow. MSCI index inflow is expected to come in the first week of June. If it comes, then it can give some kind of stability to dollar rupee pair. And the final reason is RBI. RBI has been acting like a wall, not allowing dollar rupee pair to move beyond 77.80 level. I often tell my client that if you are able to judge RBI's action, then you have to be in that side of the trend where RBI is. If RBI is selling, then you be on the sell side. If RBI is buying, then you be on the buying side in dollar rupee pair. Now let us analyze negative factors. There are three negative factors. The first factor is crude oil prices are not coming down. It is moving upwards and upwards only. Second reason is FII has been continuously selling in Indian equity and debt market. In the month of May, they have sold close to $4.5 billion. And the third reason is geopolitical tension between Russia and Ukraine. These are all the factors which can keep rupee under pressure. So now let us discuss what is the outlook for the pair. Based on the positive and negatives, we can clearly understand that positives are more than the negative. Based on that, we expect the dollar rupee pair will not break above 78.10 to 78.20 level, and there is a 80 to 85% probability that the pair will move towards 77.10 and 76.80 level in coming days. Now let us discuss strategy for thin margin exporters. Thin margin exporters like agri exporter or chemical exporter, most of them have taken costing between 77.25 to 77.5 level. We suggest them that they should cover on a back-to-back basis 100% between 77.5 to 77.70 levels. Any exporter who wants to keep their position open, they should follow a strict stop loss of 77.40. Once 77.40 is broken, they should completely hedge all their open positions. Now let us discuss strategy for thick margin exporters. Thick margin exporters like textile exporter or an engineering exporter, to them we will suggest two things. First, as the biasness of the pair is on the appreciation side, they can keep a hedge ratio between 55 to 60%. That is the idea number one. Second idea is that whenever the inward remnants are coming, instead of utilizing their forward, what they should do, they should convert their money on either spot basis or cash basis. Now let us discuss strategy for importers. For importer, the strategy is very simple. Wait with a stop loss of 78 for a target of 77.10 and 76.80 levels for their import cover. Now let us discuss trading idea for coming week. लास्ट वीक यूरो यूएसडी बाई कॉल दिया था, टारगेट अचीव हो गया लेकिन बाइंग लेवल का अपॉर्चुनिटी नहीं मिला. फॉर दिस वीक वी आर सजेस्टिंग सेल कॉल इन यूएसडी आईएनआर पेयर. समवन कैन सेल यूएसडी आईएनआर जून फ्यूचर between 77.75 to 77.90 level. Target is 76.90. Stop loss is 78.15. With this, I will end my today's presentation. जय हिंद, नमस्कार, फिर मिलेंगे नेक्स्ट वीक.